I did a video on UNH like 7 days ago, and right after I did the video, some kind of news came out. The stock went down 7%. 3 or 4 pieces of news came out since then. Also, I told you guys I'm not gonna make another video before the next earnings report, but so much has happened. Every single day there's something else. This is the craziest company I was involved in, and I am covering the stock. And I'm gonna do the final one, hopefully, if nothing else happens from now to Q2. I'm gonna let you know everything that has happened since then. And I'm also gonna answer some of the challenges and pushback I got in the comments, which I always appreciate. I do those videos, I post on X, because I like negative feedback. I want people to tell me why I'm wrong and why maybe I am wrong on something, and sometimes I am wrong and I correct my mistake or I learn something. So I always like to interact with you guys and check the comments and reply to the comments and check everything else. But I did tell you guys that UNH is either the next Meta, when Meta went down 77% to around $88 per share, and it's now trading at $635. Maybe UNH is the next Meta, or it's the next Walgreens, where the stock goes down and it pretty much never recovers. Now, a lot of people have been saying something that makes a little bit of sense, that maybe UNH isn't the next Meta, and it's not the next Walgreens, but maybe it's the next Boeing. When Boeing had a lot of legal challenges, the stock went down a lot back in 2018, and it still hasn't recovered from 2018. And it took a long time to recover. It was faced with a lot of lawsuits, a lot of legal challenges, a lot of problems. They had to pay a lot of fines. And UNH is kind of in the same boat. I don't believe so, but it could be very, very possible. So I'm going to talk about all those things today, and I really hope you enjoy it as always. Now, the first article that came out right after I did my video was the Fed investigating UnitedHealth for criminal medical fraud, and the stock sold off 7% on this day before it ultimately bottomed. In the same exact day, UNH responded to this article. No one's talking about this, but they responded to the article. And they said, we haven't been notified by the Department of Justice of the supposed criminal investigation reported without official attribution. The Wall Street Journal reporting this is deeply irresponsible, as even it admits that the exact nature of the potential crime allegations is unclear. There's nothing like that from the department. It doesn't even exist. It's just an article that Wall Street Journal made up, and then everyone went on it, and the stock sold off like 7 or 10% before it ultimately bottomed. And no one was talking about the articles that UnitedHealth has posted, which says that they haven't been notified. So if they are under investigation, the Department of Justice would tell them. There's none of that stuff happening. Then yesterday, a new article came out, and that was UnitedHealth secretly paying nursing homes to reduce hospital transfers. And UNH also responded to this one. And they said the US Department of Justice investigated those allegations, interviewed witnesses, and obtained thousands of documents that demonstrated the significant factual inaccuracies in the allegation. After reviewing all the evidence during its multi-year investigation, the Department of Justice declined to pursue the matter. So this is also, again, all made up. I don't know what's happening. So maybe whenever those articles, they mention UnitedHealth, and people they hate UnitedHealth, so it gets a lot of attention and it gets shared, they get publicity. But none of this is true. Like, if it's true, I'm like, okay, we have to really think about that stuff. But the first ones, they denied it, and they denied the second one also. So to me, this is, again, very, very interesting what's happening. Is it just the short sellers? They're trying to collaborate with those media outlets and post those things? Or is it maybe something that's happening and UnitedHealth is just denying it? I highly doubt it. I highly doubt they would do something like that. But again, that has already happened, and they didn't pursue the matter after years and thousands of papers. So this is another one where it's just freaking out the market. Everyone reads those articles, but no one reads what UnitedHealth is saying about the matter. And I think it's important to look at both sides. Now, something else came out recently, which is also a little bit concerning, and this one is true. It's not made up. It's actually true. Where the CMS, they rolled out aggressive strategy to enhance and accelerate Medicare Advantage audits. Whenever they reimburse them, they do an audit every single year, but they have been behind for many years right now. And I said currently, CMS is several years behind in completing those audits. Federal estimates suggesting that MA plans may overbill the government by approximately $17 billion annually. But there's other estimates which could be as high as $43 billion per year. To address the backlog, the Trump administration has introduced a plan to complete all remaining RADV audits for 2018 to 2024 by early 2026. So they had a backlog since 2018. They haven't completed those audits. They want to complete them by next year. And maybe UnitedHealth will end up owing the government some money. And it could be again from $17 billion a year to $43 billion for the entire industry. So the way I'm looking at it is, it could be as high as 43, as low as 17, and it could be nothing. Like, no one really knows where it will end up being, but it will likely be an overcharge, and it's not just UnitedHealth. Now, UnitedHealth is expected to have a 10% market share in the insurance industry. Okay, so if we take the mid-range between 43 and 17, let's take $25 billion a year in overcharges. If it's $25 billion a year, this is $2.5 billion for United Healthcare if they have a 10% market share. I'm just making an assumption here. And it's so far around 6 years of audits, so we time it by 6. This is around $15 billion. So United Health could end up owing $15 billion to the government. And based on my research on Google, is there's 3 methods where they deal with that stuff. The first one is a lump sum payment where United Health has to pay up $15 billion, and United Health could easily do that. I mean, $15 billion is not a lot for a company like United Health. It was worth $400 billion a few weeks ago. It's not really a lot for a company like United Health. The second one, where they offset future payments to the company and they kind of deduct it every single year. The third one was some kind of a repayment schedule. And from my understanding is there's no penalties or interest on that stuff because it's the government that they didn't audit that stuff. So this is how I looked at it from my research. And yes, this is bad, and it could cause $15 to $20 billion of extra charges to United Health. And it's not really a small amount, but it's not a big amount either for the company. And that's what I wanted to say. Now, the last challenge that I got in the comment, and this is a major one, is the challenges around PBMs, which are private benefit managers. President Trump, he wants to eliminate or heavily regulate PBMs, and United Health owns a PBM called OptumRx. And OptumRx makes up around $54 billion of annual revenues for United Health. Now, the comments that I was getting on my videos was that, yeah, but Optum makes $54 billion. If they get cut off by 50%, then they're gonna lose $25 billion in revenues, and this is massive for United Health, and the stock's going to zero. Yes, they do make up $54 billion of revenues, but you really have to look at operating income and how much net revenues, because a lot of it is just drugs. They pretty much negotiate the price of drugs. They call them the middleman. Okay. Now, if you look at United Health or OptumRx operating income, it's $6 billion out of $33.5 billion. This is a very different picture. So let's assume they heavily regulate PBMs and it gets cut in half. That means the operating income for United Health, it would go from $33 billion to $30 billion. Big deal. It's not as big as of a deal as a lot of people in the comments believe that, oh, it makes up $50 billion in revenues, and then if that goes away, then, the stock is worth nothing, and that's why earnings are going to go down. Well, if it gets cut in half, it's only $3 billion in operating income out of $33 billion. This is still significant. It's in total, it makes up around 17% of United Health's operating income, but it's not as big as what a lot of people believe it is for the business of United Health, as United Health is very diversified. Not just in OptumRx, they have Optum Health, they have Optum Insights, they have United Health Business, they have many different businesses within the company. And OptumRx, yes, it could suffer this year. There could be another knife in United Health's back, but it's $6 billion out of $33 billion. If it gets cut in half, this is $3 billion. No big deal for United Health. And by the way, I'm using FinChat to come up with those charts because I couldn't find any website that would show me OptumRx and operating income and all those things. So if you want to try it out, they give you 2 weeks of free access if you use my link in the description. Now, I talked about all the negatives. I'm going to talk about some positives because this stock does have a lot of positives. But before I talk about the positives, I just want to share and talk about my favorite quote from Howard Mark and my favorite quote in investing in general. And it says, it's not what you buy, it's what you pay. And success in investing doesn't come from buying good things, but from buying things well. And if you don't know the difference, you're in the wrong business. And he basically means that investors very often they pay too much attention to what they're buying. They pay attention too much to the quality of the business, and this is a quality company, and this is a company that has massive revenue growth, and they love the story around the company. It's all about what they see in the company, but they don't really pay attention to how much they're paying for this company. So maybe it's a trashy company, but if you're paying the right price, you could still make money. I gave you guys examples. BTI, that was one that people hated. You could still made money with BTI and locked in a 10% dividend. Nestle is a company with no revenue growth. You could have made money with Nestle also. I can also give you an example of an amazing high quality company like MSCI. MSCI is still flat for like 4 or 5 years. So even though it was an amazing company, but if you paid too much for this company, you still lost money. So it's not just about the quality of the business, it's also about how much we're paying for this business. And UnitedHealth does have a lot of positives. One of them is massive insiders have been buying $5 million from this officer. The CEO, he just joined. He already has like $300 million worth of the stocks. Stephen Hemsley, he bought in $25 million of the stock at $288 per share. Do you think he doesn't have confidence in the business for him to put in 25 million? He didn't put in 100,000 or, I mean, relative to his net worth, 25 million is a lot of money. That's pretty amazing. Another insider bought 500,000 worth of stock. Another one bought 1 million. This one bought around $93,000. This is not small amount, guys. I mean, 25 million, 1 million, 5 million, this is not small amounts, even for them. That's a big commitment. And around the 280, 290, that was like peak capitulation with UnitedHealth. Now, you also have a lot of Congress members buying. One of them is MTG, they call her MTG. And she bought $65,000 of the UnitedHealth dip. Maybe this is not a lot, but those kind of senators and House representatives, they know much more than we do. And she bought 65,000 worth of the stock, which I found very interesting. Now, if we look at how much we're paying for UnitedHealth, we're paying around 13 times earnings. The average earnings multiple is around 18.8, almost 19 times. Just a few weeks ago, the stock was trading at 25 times earnings. Now it's trading at 13 times earnings. This is Mr. Market. The market is not efficient. This is how you get opportunities in the market. Now let's assume, even though the earnings got revised, first, UnitedHealth was expected to grow 15% in earnings. It went from 15% to zero. Now, let's say it could decline 15%. If it does decline 15 or 20% this year, then the PE ratio could go from 13 to 14 or 15 times. Is this expensive for a company like UnitedHealth? Even though we could have an earnings revision, in my opinion, there's a lot of margin of safety anywhere under $300 or close to $300 or around 13 times earnings. Even if it gets revised, it goes 14, 15 times. This is still not expensive for a company like United Healthcare, and especially taking into consideration that the CEO is still expecting 13 to 16% long-term growth in earnings per share. So it's 13 to 16, even if it gets revised to 15 or 16 times and earnings get revised down, if they can reach this goal or get anywhere close to it, you're buying it at a 1 peg ratio, 1 time price to earnings growth, or around a free cash flow yield of 9.5%. And no one would have ever dreamed of getting 9.5% on UNH just a few weeks ago. But now no one wants to stock because of all the drama. Most of those articles, again, this one, it got denied. The first one around some fraud investigation, it also got denied. There's a lot of stories. People don't know what to believe. And every day there's something else. And I'm sure shareholders are tired. I mean, people told me I'm just tired of the stock. I'm never buying a healthcare kind of stock again. And I do feel your pain. I know it's not easy. But sometimes you really have to look at the facts instead of just looking at one side of the story. You have to look at both sides of the story. And you have to be patient. Like some stocks, they're not going to play out perfectly. They're not going to go up every time you buy them. Some stocks will go down. Some stocks will challenge you. Some stocks could take years to play out, maybe 2 or 3 years. It's not going to play out right away. And some stocks you're going to end up losing money on, which is why I told you guys, I don't like to commit a lot of money to a specific stock, and I'm more about averaging up. I don't mind averaging up if I feel the fundamentals are headed into the right direction. So for me, I DCA based on the fundamentals, improvement in fundamentals, not just based on the price. So this is how how I look at it. And that's my analysis on UNH. And I hope you enjoyed it again. I'm not going to do another one. I'm sure you guys are sick of the stock. I'm not going to do another one before the next report. Hopefully nothing crazy happens and stock doesn't go to zero. So that's just my opinion on UNH, not financial advice. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.